Well, I'll just reiterate what James was saying there. Thank you for the questions. It's really good to get feedback. And the most difficult thing about presenting webinars is the fact that when you're in front of an audience of faces, you've got a really good idea of whether the pace is right, or whether anybody's got any burning questions, or whether the whole audience have got invisible question marks over their heads. And they just don't know what you're talking about. We don't get that in a webinar situation. So feedback through the chat box is the way that you can let me know those kinds of things. And it's also great to be able to see your faces down the right hand side of my screen there, because I'm getting a bit of ability to interact with you. So we're going to talk about strategies for improving your cash flow that don't involve borrowing today. So why should you listen to me? So my name's Jo Tomlinson, and I am a qualified accountant and have been for over 25 years. And I spent 20 years in industry before I started my accounting practice 12 years ago. And while I was in industry, I did all sorts of different value-added accounting activity. I would class them as accounting activity for decision-making is where I had my niche, and my niche sector was mostly manufacturing, mostly food, mostly chocolate, which is yummy, obviously. So why would you not want to work for chocolate manufacturers? So I then, after being made redundant for a third time due to yet another restructure in one of these large businesses, I decided that I would take control of my own destiny and started up an accounting practice. We do full service accounting, including value added activity over in Garforth. I've got a team of 10, including 5 other qualified accountants. So that's who I am, and therefore I have a bit of information, a bit of knowledge, a bit of experience that is gonna help you today. So you will have heard people say cash is king, and they're right, but actually cash is the king, the queen, the prince. If you ain't got any cash, you're going to really struggle to do anything. It's a great facilitator, even if what you're running is a charity. Therefore, cash is not your driver. Profit is not necessarily your driver. Cash is a great facilitator. If you can find a way to generate free cash, then you can invest that in your business, spend it on Louboutin shoes, give it to charity, travel the world. Well, maybe not right now, travel the world. But do you know what I mean? You can do whatever you want with it. But what you've got to do is generate the free cash. So the thing to do is generate the free cash, facilitate options, and then decide what you're going to do with the cash, because you now have choices. And that's what it's all about. So today we're going to talk about really these 5 different areas. So how can you improve your chances of getting paid? Because I'm sure you guys, it wouldn't just be me, that sometimes you do things and you raise your invoice, and you know the person who said that they've had clients go into liquidation, that's a real hard stop on getting paid at that point in time. You're lucky once somebody goes through liquidation if you get 5 pence, 10 pence in the pound, and that could be a year down the line. So let's just improve our chances of actually getting paid for the things that we do. And how can we get paid faster? Because that's going to help our cash flow. How can we charge more? Because if we charge more, then there's more cash coming in at that point. How can we spend less later? And how can we attract funds that don't need paying back? So they're the things that we're going to talk about. And I'll start with the first one on the list, because that's a good place to start. So how to improve your chances of getting paid is the section that we're just going to talk about now. So how do you think you could improve your chances? Well, the first one is, from experience, make sure that whoever it is that you're doing the work for has actually heard you when you told them how much it cost. Or in some cases, I'm talking about my dad now, tell them how much it's going to cost. Some people just go into a situation on trust alone. I need this kitchen fitting. Lovely. Can you do it? Yes, I can. Nobody's ever talked about price. And sometimes we'll have somebody, you know, in the halcyon days when we had people coming into our offices, not working from home with 2 noisy dogs, they would come in, we'd talk about the services, they'd say, brilliant, we love everything that you've said, all the rest of it, we'll sign up. I say, well, I haven't even told you how much it is yet. How can you sign up to something? You have no idea how much I'm going to charge you. But it happens. People sign up to things, not necessarily physically sign, verbally sign up to products or services, and they don't know how much they're going to cost, and then they get a shock. Have you ever received a surprise invoice that you didn't think you were getting, that you were happy to see? No. You need to set people's expectations about how much something is going to cost at the earliest point that you can, and get it in writing at every opportunity. So raise an estimate, a quote, a proposal, whatever it's called. There are pieces of software. Well, so you can do this within accounting software. So within QuickBooks, within Xero, they all offer the opportunity to raise something, an estimate, a quote, whatever it might be, which you can send to somebody. You can even, on some of them, get people to sign on your mobile phone or your iPad or whatever, like the postman does, and you sign with the thing. That's evidence of the fact that that amount was agreed for that amount of work. So raise an estimate, a quote or a proposal. We use separate proposal raising software because we have all sorts of different things we want to get over. T's and C's, what's included, what's not included. Make sure that people understand exactly what they're going to pay for up front. It really does help you to get paid, because you're not then surprising them in a bad way when you tell them how much something's costing. And if you can get a signature, if you can get an email acknowledgement, a hard copy signature or something, then that is brilliant. So the next thing is raise your sales invoices through a piece of software. So some people, and again, my dad, I love my dad. I'm not saying I don't love my dad, but I really wish that he'd listen to my advice. He handwrites his invoices, and he has no estimate beforehand. He's got a handwritten invoice, one copy of handwritten invoice. If they then come back and say, oh, I ain't paying that for whatever reason, he doesn't even have another copy to take to the court. I mean, have something so you can replicate that invoice should you need to. And if you raise it in a piece of software, most of these pieces of software will allow you to send it from the software. Well, that again is evidence. It's evidence that you sent it. Lots of them even have a "this has been read" function within them. So not only have you got evidence that you sent it and a date stamp of the date that it went, on a lot of them, you also have a date stamp of when they opened it and read it. Well, this is wonderful. You send it in the post, and I'm not trying to do postman out of jobs here, but if you send it in the post, you have, unless you go registered, you have got no evidence that you ever sent that or that it was ever received. And that's even ignoring the trees and the fact that it could take 3 days to even get there. So don't do that. We're trying to get paid, and we're trying to get paid faster. So please raise your invoices through a piece of software and send it through the software. And if you've raised an estimate, as we talked about in the previous slide, in most pieces of software, at the touch of one button, you can convert the estimate into an invoice. You may need to amend it because it may have changed slightly. So you did an estimate, they've now decided they want 3 days rather than 5. They've now decided that they want extras or a slightly different thing, whatever it might be. You amend that then on the invoice if that's what you've agreed along the way. But if somebody, let's just talk about this agreeing along the way. So you raise an invoice. Let's be clear about what that invoice includes and what it doesn't include, because scope creep comes out of your pocket. If you give a quote to do a thing, and then let's go back to my dad, because he's not here, so we're not offending anybody. We go back to my dad, he's fitting a kitchen, and somebody says, oh, could you just bob me a double socket here? Because now I've looked at it, I think I need a double socket here. And he's gone, yeah, of course I will. You need to raise an extra works order for that. So yes, I can. And that will be £75, whatever it is. It's an add-on to your invoice, an add-on to your invoice in writing for every single thing that you're going to do. Otherwise, you end up doing it for free. And it's even worse if it's services, because us service providers can't then go, oh, well, that was there. You know, here's the socket that you asked for. We're then going, well, I'm going to do you X, Y, and Z. If you take somebody who's doing some kind of social media, is that per post? Is that per month? How much activity is included and what's not included? Can you just cost you a lot of money unless you have a process and procedure in place to track and quote for extra works orders whenever somebody wants something that is outside of the scope of the original estimate that you gave them. So that might need then adding in, so if you've raised an original estimate, you've also raised a couple of extra works orders along the way, they need adding into the invoice as well to make sure that you get paid for everything that you have done. All your time and effort, all your goods and services are charged for. So check that your customer has received an invoice. So whichever way you send your invoice to a customer, it never does any harm to do a courtesy call that just says, have you got my invoice? Check with your customer that everything's okay on that invoice. So if they've looked at that invoice and gone, I am paying that, because maybe you didn't agree the extra works order amount, or maybe you've just made a mistake, because people do, or they're not happy with something that's been done. If you make a call a couple of days after you've sent an invoice and just say, just checking that you got the invoice and that everything's okay on there, you can talk about any credit notes that need raising right there and then. You can send, if it's gone into their spam for some reason, you can ask them to check their spam. They've got it. They're putting it on their system. This is what you want. You do not want to wait until the due date of your invoice has passed before you start checking these things. You need to check them right at the start. We're talking about getting paid here, and we're talking about getting paid quicker. So let's take away some of the excuses that people use for why they're not going to pay you. Let's get them off as soon as possible. So, credit check all of your customers before you do any business with them. Loads of people are guilty of not doing this because, oh, well, I've seen their website and they look really good. They've been around for a while. Yeah, tell that to yourself in a year's time when you've seen that liquidation notice. I'm not saying that you're credit checking to check if people are bad people. You're credit checking to make sure they can afford to pay your invoice. Or in some cases, don't habitually not pay because they're that kind of person. Doing a credit check will tell you if they've got CCJs, and it will tell you how creditworthy they are. If they're not creditworthy, you can still do business with them. It's cash up front. Yeah? You're not a charity. This is not for free. So make sure that people have got the money before you actually trade. So that's the end of this particular subsection, which is how to improve your chances of getting paid. You may at some point have to go legal. So you may, in good faith, do some work for somebody, provide your goods or your services to them, and then they don't pay. And they say they're going to pay, and they give you all the excuses in the book, and they still don't pay. And whatever happens further down the line, you're on either the small claims service online, or you're speaking to a solicitor about collecting this money in, because you've got to the point where I don't care if there isn't a future relationship anymore. I just need my money. I just need you to do your half of the bargain. I provided the goods and services. You said that in return for that, you would pay me cash. I'd like my cash now. If you go legal, you need evidence. An upfront price is evidence if it's agreed in writing. An invoice that is sent via email is evidence of when it went and when it was received. If you check that somebody has received it and they say that there is no dispute, let's see if we can't get that on an email, because that's always good evidence too. And if you do the credit check-in, you can ensure that they can pay and they don't have loads of CCJs. Some people, they're in the minority, but we all come across them at some point in our lives. They just don't like to pay for anything. You could have the best goods or have provided the best services that they've ever had, and they absolutely love it, but they never intended to pay in the first place. And they're not going to tell you that when you meet them, first off. You'll find that out later when they don't pay your bill, and then you credit check them a little bit too late and find out that they've got another 16 CCJs and they just don't care. Some people are just like that, unfortunately. So protect yourself against those people by credit checking everyone. And just to reiterate on that extra works orders and scope creep, if you've quoted for a particular thing, be really clear about what is and isn't included in that quote. And then if they come back and ask for other things that are not in the quote, say, yes, of course, I can provide that. And I'll get you a proposal, a quote, or whatever it is sent over for how much that additional service is going to cost you. It drops straight to your bottom line, that stuff. That is definitely worth having. Okay. We get paid faster because cash looks beautiful in your bank account. So we want to see it there. Big numbers in your bank account is where it's at. How do we get the money in there? So we want to get paid faster. Have you ever thought of asking for upfront payments? Horror. How could you say such a thing? My customers will never go for that. You might be surprised. You might be surprised. So a couple of years ago, I was having a new website done, and I interviewed a few different web designers and people who were in the market to provide me with a new website. And I came across one and I thought, yes, you are the partner that I'm going to work with. And I do intend to pay. If I sign up to work with somebody, I have every intention of paying them for those services. Otherwise, I wouldn't even be speaking to them. When they asked for 50% upfront, I didn't even blink. I just paid it. They had it in their bank account the same day. I didn't even blink. And it made me think, actually, maybe I should be asking for upfront payments. So I'd been a little bit shy about asking for upfront payments. And now, if somebody's year end has already passed, I might ask for 50% upfront. If they're getting close to their deadline, I'm sure this again will surprise you, we do have people who come to us as a potential new client, like 12 days to the deadline of filing their year-end accounts and say, can you help me? Yes, I can. Here's my bank details. Transfer the cost for doing that today and we'll meet the deadline for you. But unless you're prepared to act straight away, I don't see why I should. So in different circumstances, we use different strategies, and you can do this too. So depending on what it is that you're doing, I think it's totally acceptable to ask for a deposit. If somebody's got a poor credit rating or they've walked in off the street, if you've never met them before and know nothing about them whatsoever, what is the problem with asking them to pay the whole lot up front as a pro forma? I really don't see the issue with that. So payments in advance and stage payments is something that certain trades do all the time. So if you think about a house builder, an extension builder, they will ask for staged payments. And at certain points, they will ask for a chunk of money because they're outlaying for goods as well as providing services. We have wages to pay, you know, depending on the size of your organization, your money's going out long before any's coming in. Well, what about asking to share in the pain? Until you ask, you don't know the answer. And if you ask and they're dead set that you're the best provider for their goods and services and they really want you, they'll pay it. They will pay it. If you don't ask, you'll never get it. You will never have somebody who says, I know you're on 30-day terms, but I'd like to pay you now before you start doing the job. You're not going to get that. So unless you ask, you won't get it. You do need to raise an invoice at the time that you're asking for a deposit or all the money up front at any stage, because it is a tax point and you may be VAT registered or they may be VAT registered and the documentary evidence needs to be there with it. So make sure that you've done that as well. It is a VAT point, but ask for it. Ask for payment up front. You'll be surprised. Make it easier for people to pay. So if the only way that somebody can pay you is by bank transfer, then they may not be in front of their computer. They may not have their credentials. They may not have money in the bank, but they may have a credit card that they can use. So if you take payment via PayPal, if you enable that, fees do apply. But if those fees are whatever, a couple of quid, and you've got the money now rather than never, and you're chasing it, how much of your time is spent chasing money that you could have received today via PayPal off somebody's credit card? When somebody says to you, I haven't got enough money in the bank to pay that, I want to say to them, well, why did you ask me to do it in the first place? But I don't. What I do say is, that's no problem. I'll send you an invoice with a pay now function on it, and you can pay via any debit or credit card using PayPal. We have people walk into the office and we'll do a meeting with them and they'll get the wallet out and the cards and they'll say, can I pay you now? No, I can't take cash because we have to be whiter than white. We have an Izettle machine. We have an ability for somebody to pay there and then. If they want to pay there and then, lovely. I'll take your money off you there and then. And I'll send you the sales receipt if I've not done you an invoice. And then that puts it all in the books and it's all good. And I'll use something like an Izettle. PayPal have a pay now machine. There are lots of different machines out there. Or direct debit. Here's another thing. You can, if you're doing ongoing services, even if the level of that service changes up and down month on month, you can sign somebody up to direct debit. They sign up to the direct debit mandate, and then you're all bound by the direct debit mandate rules. But the direct debit mandate rules say that you can raise an invoice today that may not be the same as the invoice you raised last month, but that doesn't come out of your customer, your client, whatever you call them's bank account for 5 working days. So if they want to dispute that invoice, they can. They've got 5 working days to do it. It then puts its hand into their bank account and takes out your money and then gives it to you. Again, charges apply. But if you do regularly trade with the same people, direct debit is a great way of making sure that you're going to get paid and you know exactly the day that you're going to get paid on. So early payment discounts scare the life out of a lot of people. It doesn't have to be a lot. It could be 0.5%, it could be 1%, it could be whatever. But do you know, if you trade with bigger businesses, and especially if you trade with the council, where does it put your invoice in the list of things getting paid? Right to the top. Because people, us, the human animal, we have a fear of loss. So we don't want to lose that discount. It might be 27 pence, but we don't want to lose it. If we suddenly acquire 27 pence from down the sofa, we're made up. It makes our day. It's 27 pence, but it doesn't make any difference. It can be a relatively small amount to drive a behaviour that you're looking for. I'm not saying it always would work, but if you're in a position where you've got a lot of money that is owed to you on a regular basis and you're having to go out and pay to get money, so imagine you were paying for a loan or an overdraft or something that's costing you a facility fee for that money. If you offer a discount that's less than that, your quid's in. Yeah, you've got your money, slightly less of it, rather than paying the bank for the privilege of borrowing theirs, because you're now an unpaid banker for your customer. If we can incentivize them to give it to us sooner, then that works a treat. We can go with the carrot, which is that one, or we can go with the stick. The stick sticks in people's throats. The carrots they like. So why don't you, if you think that somebody's going to not pay as quickly as you'd like, put 2% on their invoice and give them a 2% early payment discount. If they pay it on time, then nobody's actually spent any more money. It's a thought, something that not all customers will stomach, but yours might. You never know. It might be a way forward. So late payment penalties and interest are something that you would need to write into your T's and C's before you could do it, but it is allowed to do it. It does really stick in people's throat though. So if you want a long-term relationship with somebody, that's not necessarily the best way to get that long-term relationship. But if it's a short-term relationship because they're not paying you and you're a little bit hacked off with the fact that they're not paying you, then whack a payment penalty on there because it will soon show the colour of their money. Shorten payment terms. So if you are on 30 days standard terms with all of your customers, then how about floating that you change that to 7? How about just going in with it and negotiating with somebody? Some people will go, oh, we're on 3 months, 90 days, 30 days, end of month, whatever it might be. Give it a whirl. See what you can get away with. If you say to somebody, my payment terms are 7 days, and theirs were 30 days, end of month, you might get 14 out of it. But it's quicker than you were going to get if you just went with their standard terms. Get into a bit of negotiation sometimes. See what you can actually achieve. So how do you get paid faster? Try some new strategies. Actually have a bit of gumption about the fact that the goods and services that you're offering are worth it. And if somebody didn't intend to pay for them, then they shouldn't have signed up with you in the first place. So if they did want those goods and services, what difference should it really make to them if they have to pay you sooner rather than later? You are not a bank. You are not a bank. Make that clear. These are my terms. This is when I expect to be paid. Ask for deposits up front. Take payments either in part or in full before even the work is done or the goods are delivered. Incentivise early payment and make it easy. Make it easy. Customer service. Give people more payment options. Have we got any questions on this section, James?
I think you've answered the question that came in around deposit issue and refundable. Do I state in the documents that it is not refundable deposit?
You do if it is. So here's the thing on deposits. It's a complicated area. We've got some really complicated scenarios on this at the minute because somebody decided that they'd reduce the VAT rate to 5% for certain things that people habitually pay deposits on. So restaurants and hotel bookings are things that people regularly would pay a deposit on. So a deposit, if it's non-refundable, has a VAT point at the time you get the money. If it's refundable, the VAT point is the time that it becomes non-refundable. So you might take a deposit 6 months in advance to secure a table, but have a refund policy for 30 days before or 7 days before. So you could actually make that your tax point. It makes it complicated. Now imagine you took a deposit at 20% and the goods or services that you're going to have are going to be at 5%. It's great being me. So there are some complicated scenarios associated with it. So yeah. Deposits, it's all about whether or not it's refundable, and the point that it becomes non-refundable is the point where it becomes a sale and therefore a tax, a VAT point.
Yeah, I think the question that came in was, you know, this person has a considerable output of materials to manufacturing, so when the order's made, there's the material cost there, and then at that stage, at a later stage, perhaps they're cancelling their orders. I think that's, yeah. I understood the question.
Yeah, definitely have a deposit, an upfront payment that covers your materials and the cost of manufacture, so that if they do cancel and you're however far down the line, you're not out of pocket with a load of stuff to offload that you never wanted in the first place.
And I guess playing a little bit of the dumb question here on my part, if I wanted to incorporate those T's and C's, who's generally the best person to speak to? Is it somebody, you know, a solicitor or a legal department?
For T's and C's, you can pick things up off the internet, and I tell you where a great place to get documents from is the FSB. So if you're a member of the FSB, and that's really like, it's like less than 200 quid if it's just you and you're starting out in business. I don't know. It goes up on number of people. So I'm not sure how much it goes up. So Federation of Small Business, they're there for small businesses, for us, and they have loads of documents in their document portal, including specimen T's and C's, specimen employment contracts, specimen employment contracts for apprentices, all sorts of stuff that you wouldn't even imagine existed and that you might ever need is sat there in their document library. So you can pick stuff and use it as an Aunt Sally, you know, go through it and go, oh, well, actually, I wouldn't want that. We'll take that one out then. Or I would want this one in. But it gives you the framework, and you know what? It gives you loads of stuff that you never even thought of putting in there. Because why would you? You're not a solicitor. So yeah, I would recommend having a look at the FSB for that, and you can go on their website and have a look at that and get a quote for doing it and all the rest of it. And it is the legal advice helplines and stuff on there that come with the membership. So it's, you know, it can be worth having just for that.
Thanks, Joe. I think just to Also, just on the kind of the T's and C's side of things, you mentioned about early repayments and other kind of strategies that businesses can use to kind of get that early payment release. Would you, if you were considering other payment methods, would you have to consider those into your T's and C's before issuing them out?
It really depends what. So if it's a deposit and it's non-refundable, I would make that very, very clear so that nobody can ever say, oh, I didn't know it was. If you're going to put in penalties, again, I think you need to make that clear. And I think you need to make it clear if you put in a discount, in an early payment discount, that if they don't actually pay within the terms of that, it does not qualify them for that smaller amount, because people are terrible and they'll pay the discounted amount late. And then you need to go back and say to them, no, you've underpaid, and here's the T's and C's that said that was the case.
Thanks, Joe. Thanks.
Yeah. Okay. So the next thing is how much to charge. Because if you charge too little, you're never going to have any cash, because you're not making any profit. And if you've not got good profit clearance, then you're unlikely to have any cash. Now, some people work on a really, really small margin, and that's fine. Some people work on a big margin, and that's fine too. And there is no such thing as a commodity price for anything. I don't know what you guys sell. It doesn't matter. The principle is the same. There is no such thing as a commodity price. Let's think about water. You can get it out of the tap for nothing, or for 0.0000 penny for a glass. And yet sometimes you might go into a high-end restaurant and pay £10 a bottle just because it's got a bit of fizz in it. There is no such thing as a commodity price for water. So if there's no commodity price for that thing, water, why is there one for what you do? It's all about people's perception of the value of what it is that you do, that you sell. So if you can get that proposition, that pricing, and that value articulated well enough, you can charge anything. I mean, people charge thousands of pounds for a pair of shoes. You can go down Tesco and get a pair of shoes for a tenner. Primani, they're probably about £3. It's still a pair of shoes, arguably still satisfies the same purpose, but Louboutins are £1,000 a pair. Now go figure. So how much is it? Who are you? What's the quality? And how do you articulate that quality? And where are you in the market? And I'm going to go into this in a lot more detail on another webinar that we'll talk about at the end. I don't have enough time on this one to really go into all the pricing stuff. But if you get your pricing right, you not only improve your profit, but you also include your cash flow, because the amount of cash coming in is far outweighing the cash that's going out. And that's what we want, a positive cash flow movement. So how much should you be charging? How
She's frozen.
Lovely. So one of the things that you want to do is think about increasing your prices. It's difficult for people to do a show of hands, but normally when I'm doing a pricing type thing, I would ask for a show of hands. When did you last increase your prices? And if that was not in the last year, then you need to increase your prices. Even if it was in the last 6 months, you may need to increase your prices, because if when you increased your prices, your sales never went down, then you're still not charging enough. If your order book is full, you're not charging enough. If when you tell people your price, they say, yep, straight away without even thinking about it, you're not charging enough. If you never have anybody say, no, I'm sorry, that's too expensive, you are not charging enough. So think about putting up your prices. It just drops straight to your bottom line. And who wants to be a busy fool anyway? If you did 20% less work and charged 50% more, you would make significantly more profit and be able to spend time on the golf course if that was something that you didn't find tedious and boring. Some people like both. So if you put your prices up, it means that you can satisfy a higher quality output that you can be proud of. So you don't have to rush jobs. You don't have to be saying, oh, I haven't got time for all of that, because you've put your prices up to a point where you're not overworked and you can still have the lifestyle that you deserve. But you can also give people a quality product, the quality service that they are happy with and you're really proud of. So it's something to really consider, putting prices up. And if you are thinking of putting prices up, come to the pricing webinar that I'm doing in a couple of weeks' time. Upselling is this. There was somebody did a sketch on this a good few years ago. I'm showing my age now. Do you want chips with that? So it was a McDonald's type sketch, and you went in. Can I get a fillet of fish? Do you want chips with that? Can I get a Big Mac? Do you want chips with that? Can I have some chips? Do you want chips with that? And it's all about the upsell. And airlines are brilliant at it. You pay nothing for the seat. You pay to check in. You pay to have a bag. You pay to have a drink. You're probably going to have to pay to go to the toilet soon. I mean, really, you pay for everything else, but the seat is cheap. They get you in on the seat, they make the money out of all the other things. It's all about the upsell. And the higher that you can get the amount that somebody spends, then the more money that you're making because of the upsell. If you sell more frequently, that'll make you more money. It'll bring more cash in more often, which is what we're talking about. And a great example of this is hairdressers. So if you went to the hairdresser and you then decided when your hair needed cutting, then you might decide in 6 weeks' time that you need to go again, and you think, oh, I can't do a note with my hair, I need my hair cut in. It might take another 2 weeks to get in. But if your hairdresser books you in before you even leave, in 4 weeks' time, you've had twice as many haircuts in a year. If they book you in for 6 weeks, you've had 50% more haircuts in a year, and your hairdresser has just had 50% more income. So how can you employ that strategy in your business? Discounts. When should you give a discount? Mostly never. I'm not a big fan of discounts. Discounts are okay if discounts work for you. So if you have got a restaurant and you never see a single soul on a Wednesday, either close on a Wednesday or do a discount on a Wednesday, do a hump day special, whatever it might be. So if you've got a particular dip and you've still got the overhead and you want to sweat your overhead, now you can use the discount for that. When do you never use a discount? When someone asks for one. So I tell somebody, this is how much it's going to be for my goods and services. And they say to me, oh, is there what you can do on price? No, which services do you not want? Yeah, we can make it less if you have less services. If you go into Tesco and they say it's £57.42p and you say, well, that's a bit much. What can you do me on price? Well, which products do you want to leave with me? That's your price. So discounts, I'm not a big fan of. Unless they work for you. So bog-offs and twofers and all that kind of thing, typically they put massive uplift in, but you don't make any money on them. And then you're a busy fool. So let's have a look at what we're pricing, be confident in that price, don't give discounts unless the discount is something that works for you. Sell more frequently and increase your pricing. So how do you get more for what you're selling? Belief. You have to believe that your product or service is worth that higher price, and look somebody in the eye and tell them it, and then go quiet. It's something I'm rubbish at, going quiet. I'll just let you into a little secret. I'm sure that'll be a surprise to you. But you have to go quiet. You have to just let them take it in. And then they'll either say yeah or they'll say no, but don't worry about it. Some people need to say no. And if they don't, you're not charging enough. So the way that people say yes to a higher price is the way is based on the way you marketed it. So if you're telling somebody, I have got the best thing ever, you really need these shoes, they've got red soles and everything, and they're a tenner, well, they're not Louboutins, are they? So think about the balance of the way that you're doing the marketing. If you're telling somebody that you're the best around, that they ain't going to find anybody who's going to provide that the way that you do, you cannot be the cheapest around as well. You won't make the sale, not even on price, because now they haven't got a clue what they're buying. Get it all in balance. If you're saying you're the best and you are the best, then price for the best. And if you're going in on price, there's always somebody who's going to go in cheaper than you. So you won't keep somebody who's just after price. So sell on something other than price. There's loads of reasons people buy, and most of them are not price. Mid-tier pricing I'll go into in depth when I do the next webinar. But this is about having like a bronze, silver and gold offering, or with like Tesco, they do like a lasagna that you can buy a ready meal for £1. It's never seen meat and it's not declared as vegetarian. They also do one for £5, and for £5 you could actually get proper food, not a ready meal. And you have to put it in oven. Whoever puts a ready meal in oven? So there's one in the middle for like £3.50. And that's the one that Tesco are trying to sell. And you'll find that they'll put that right in your eye line, but they'll sometimes put that higher price one there and you'll go, there ain't no way I'm paying £5 for that. Oh, this one's less, I'll have that. So you'll take the £3.50 because you don't want to pay the £5, and you look at the one for £1 and go, no, I actually want food. I want nutrition. I don't want floor sweepings, therefore I'm not going for the one for the £1. And you go for the one in the middle. And that's what people do. So if you can anchor somebody, so let's say you've got £1,000, a £750 and a £400 for different levels of service. Sell them the £1,000, and when they suck air through the teeth and say, oh, that's a bit much, I can't afford this, then talk about the £750 one. And you could even say, well, we've got this one at £400, but you wouldn't get all of these different things, and make sure you take a lot out. They'll buy you £750 one. But right now, they're probably buying you £400 one because you haven't told them about the others. That's what mid-tier pricing is about. It is all around you. Look for it. Big businesses use mid-tier pricing all the time, and they use it because it works. The psychology of the human being means that mid-tier pricing works. When will you know when you've hit your perfect price? When you get that balance right of if you put your prices up, you lose a few. If you don't have a full order book, if some people, I would say around 10% is a good amount of people to say no because of price. So if about 10% of people are saying no because of price, then you've probably hit your perfect price. You will only know when you hit your perfect price by changing your price. If you put it up, you can always put it back down. Just saying. So, how to charge more. Think about upselling with bundle offers and multi-buys and add-on products and services. We've talked about that. Frequency. So money off future purchases. That's quite a good one. Also asking for reviews. You know, if you ask for reviews, that gets more people coming in. Customer service really brings people back. And if you can get them to book something in the future because they enjoyed something now, that would be great. And if somebody does book something in the future, remind them they're busy, and busy means forgetful. And you don't want them to forget to come and you have a vacant spot that you're not making any money in. You don't want an empty hotel room or whatever it might be. You don't want to take a non-refundable deposit and that's how you make your money. You want to impress people with your service. So remind them, send them texts or emails or both that say, we look forward to seeing you tomorrow at 2 o'clock. And they go, I've forgotten all about that. Rearrange the calendar or talk to you about it. Either way, it's all brilliant customer service and it gets them to come to see you more frequently. And that's what we want. So the other things on this giving a discount, so low season Wednesdays, surplus capacity, or you could go with an introductory offer. And this is just so people get a taste of what it is that you do. So if you can get people to have some of what you do at a lower price and then go in with your full price, make sure they understand what the full price is when they're tasting the goods at the lower price. Otherwise, they'll anchor their value expectation on the discounted price. And if you did this introductory offer, make it clear that's exactly what it is. Give it a time limit, give it a one time only, whatever it is. And if you're raising an invoice, put the discount on the face of the invoice. This is a £500 service with a 10% discount, this once only. Make it really, really clear that that's what you're doing. So only give discounts when you've decided it's right for you, never when somebody asks for it. Never fall out with them because they ask for it, because it doesn't do any harm trying. So how to get more, how to charge more, increase your prices. Seriously, consider it. Look at how you're articulating the value of the price that you're asking for. Upsell, so you get more from each visit. Sell more frequently and avoid discounts if you possibly can. The more you've got coming in, the chances are the more of that is going to lead to cash residual in your bank account. And that's what this is all about. So do we have any questions on pricing, James?
No, but one thing I did put into the question was to the chat function was, asking the question of how many people had raised their prices over the last 12 months. And there's some, honestly, from a winning pitch perspective, we've not increased our prices. There was a few people that said they had, and some people that hadn't. And I guess one of the points I would raise is, are your existing customers, are they working at the price that that you currently are? Let's say it's £500, whatever service it is. Are they really going to feel a 1% increase, a 2% increase? And what is that threshold of when they will start, actually questioning it? Is it 10%? How much? Are they going to batter an eyelid at that increased price? I know in this kind of day and age with COVID, it's probably more so because we're a lot more price sensitive. Yeah. But it might be something you consider actually post COVID. Because ultimately,
when will that be though, James?
I don't know. I haven't got my crystal ball with me.
That could be a year or more, couldn't it? And we need to make money now, otherwise we're not going to survive COVID ourselves. So
it could.
We need to look after ourselves today. What I do, and I appreciate what you're saying there, and you are totally right. Whenever you ask a customer to do something that they didn't ask for, so they didn't ask for a price increase. So if they're a repeat customer, they didn't ask for a price increase, it creates the buying decision again, the one that you had right at the beginning. So when people buy from you that first time, that buying decision, you recreate that when you put your prices up. You also recreate that if you change your bank account details. You also recreate that if you ask them to start paying by direct debit. And you need to be confident that you have given people such a good experience, such good customer service, that they still want it regardless of the thing that you've asked them for. And if that is true, they won't bat an eyelid at the price increase.
I think you also raised a really good point about actually, when is a good time to review your prices, because, I know, from a personal perspective, if we went to a contractor right now, they'd go, well, I don't want to entertain it. Yeah. But they would probably say that all year round, regardless if we're in COVID or not.
They would. Now we did, I will say that we did, when COVID started and lockdown, we have an annual review of all prices. So when we do the year end, we also do the fixed fee review, and we send that out to customers to sign the fixed fee review to say that they have accepted the new terms and conditions with the new price. We held off during lockdown. Yeah. We're doing them again now though. It was only during lockdown.
I guess that's also managing their expectations with your clients, in the fact that you're building that process of review on a yearly basis.
And that's actually written into our T's and C's, that we will review your prices annually. We discover that if you put your prices up, let's say you put them up 2.5% every year. So you put them up 2.5% every year. If you left it 5 years, now they're going to have an issue with the price, because the amount you'd have to put it up in 5 years' time, now that's too big a step change. Whereas if you put it up 2.5 each year, it's nothing.
Yeah. Does anyone have any additional questions that they want to raise at this point before we move on to the last? I think it's the last section of today.
That's true. There's a very little one at the end as well.
Okay. Well, I don't think there is, but yeah.
Oh. So how to spend less later, we could do a whole session on each of these sections, in fairness. You know, we all know how to keep hold of money and not spend and review cost cutting. But there are a few things that we need to consider before we just start getting rid of all of our service providers, anyone we've outsourced to, all that kind of thing. So what we can do is negotiate better payment terms. So in the same way as we wanted to reduce the payment terms for our customers, we want to extend them for our suppliers. So again, it's worth the conversation. Enter into the negotiation. If you don't ask, you won't get. Please don't ever just not pay. Don't just pay late. Don't go quiet. Somebody's done something for you or they've provided goods and services for you and you think, oh, money's tight, I'll just keep my head down. Don't do that, because it's disrespectful to your supplier. And also, if you do that, they could end up putting in proceedings to either give you a CCJ, or they could enter into winding up proceedings because you didn't pay their bill. And you don't want that on your credit rating. So if you can't afford something right now, then you could negotiate a payment plan. And I would much prefer somebody to speak to me about a payment plan than not pay my bill and go quiet on me. And I'm sure you guys would too. So just think about it from the other side. You know, what would you prefer if you were at the other end of that phone? A little one that just buys you a little bit of time is paying by cheque. So some of the younger generation don't even know what one of these is, a cheque, because it's just a bit old hat, but it buys you a bit of time. If you pay by cheque and put it in an envelope and post it second class, it's going to buy you a week, because then it needs to clear for 3 days. You've just bought yourself a week plus of that by giving them that cheque. It's very cheeky to do a post-dated cheque, very cheeky. It's a bit cheeky to pay by cheque, but it's very cheeky to pay by post-dated cheque. And if you are going to pay by cheque, please don't let it bounce. Only paying when things are due. So lots of people will pay as soon as they get an invoice because they don't like to feel that they owe anybody anything. And that's laudable and that's wonderful. But if cash is tight, don't do that. Only pay when it's actually due. So just a few things rather than just totally cutting services. So when you do want to cut your cost base, first thing to do is shop around. Second thing to do is renegotiate. You know, you might be able to negotiate a discount. You never know. Again, if you don't ask, I wouldn't fall out with you for asking. Remember, it's not always the price of the goods and services that add the cost. So if you are shopping around and you're using a goods or service provider who's always been for you, they've been there for you, the goods have always arrived on time, they've always done what they said they were going to do. A supplier that consistently is there for you when you need them. If you go to somebody who's cheaper, who can't provide a quality of service at that price that they're proud of, then you might not be that happy with the goods or services that you get. And it might actually cost you more money in the long run. So think about where you're cutting costs. Cutting costs is an easy place to just get a bit carried away and end up regretting it at your leisure. So think about what it is that you're cutting. Look at who the alternate service providers are, and are they actually what they say they are? And can they really compete at a lower price to the suppliers that you already have? A couple of pay related things. So if you've got teams and you pay them weekly, don't pay them monthly. If you've got teams and you would normally pay a pay rise every year, that's not a great thing because it doesn't incentivize everybody. You know, if you give them a pay rise every year, like 2 or 3%, there is no incentive in that. Make sure it's all performance related. And if cash is tight and you don't know what the future holds, consider paying a bonus in lieu of a pay rise, because that then you control. And you only pay it if you've got the money. So you could write a bonus scheme that says a bonus is payable if the company achieves its sales performance targets. And then you get your part of that bonus based on the value that you added to the company meeting its sales performance targets. It can be a real motivation tool and also buy you cash flow. One that I haven't put on this slide, but is a really good thing to consider, is that HMRC are all right about you negotiating terms on taxes. So if you've never used the business support helpline, then that is something to consider. Always do it before the due date of your tax. So if it's a VAT return and you can't afford the VAT, submit the never not submit the return, never ever do that. Submit the return on time and then give it 1 day, because all HMRC's computers, they're all the old legacy ones, they update overnight. So submit it on a Thursday, phone them on a Friday, pay a call, get a cup of tea, expect to have a long wait, put your smiliest face on, whether it takes a cube of chocolate or whatever to make you happy. Be as pleasant to that person as you can possibly muster, because they have the gift of giving you a payment plan, but they can also choose not to. So just pander to them, be as nice to them as you can, negotiate payment options. What it means is that they cannot charge you penalties on the late payment of that particular tax, but they will charge you interest. Their interest is pegged at a couple of points over base, given that base is 0.5%, 0.25%, whatever ridiculously low amount it is at the minute. That's about the best rate of interest you're going to get anywhere. So do consider that, but always submit on time, never submit late. Submit before it's due and then talk to them about what you can afford and when you can afford it. They've got a whole department set up just to do that. Right, think about downsizing. This is really emotive for a lot of people, but downsizing premises, if you're not needing to use them all, then don't use them all. Sublet part of it, move to smaller premises. If you need all of your premises because you stock 1,500 different stock items, how many of those do you actually sell on a regular basis? Have a sale, get rid of all the other stuff. Now you can use smaller premises. So you're not only carrying all that dead wood, or not carrying all the dead wood, but now you've just saved a load of overheads as well, and probably a load of time updating your website on all those stock items that you were stocking. You can lease not buy. So if you need a new vehicle and you bought it today and it was going to be 20 grand, you could lease that for 3 upfront payments and then pay it over 3 years. So, and often you can get a really good deal if you lease not buy. Reducing stock is a fabulous way. If you're carrying a lot of stock and you need cash in the bank, reducing stock is a fabulous way of doing that, because stock is just money sat on shelving. If you can reduce that down, it goes straight into your bottom line, straight into your cash position. Consider outsourcing some things. So you may employ somebody to do something in-house that you can actually outsource for less money. Again, consider all of the different things that that person does and the whole cost of that person. But we've had people who've employed part-time bookkeepers and paid them 10 grand a year. And for us to do the service, it's been 3 or 4. Well, that's your money that you're spending, and you might really like them, but this is business. Again, you're not a charity. You've got to survive this. So what do you have to do to survive? Consider outsourcing. I'm not saying always do it, but consider doing it. So how to spend less later. Reduce your costs where you can, but consider the whole cost of that, because if it's going to be cheaper, but you have to finish it off, or it's not done properly, or you're chasing or whatever, then it might not actually benefit you in a cost way in the long term. Delay payment by speaking to people and getting payment plans or agreeing longer payment terms, not by just not paying. And reduce overhead commitments by perhaps doing bonuses rather than pay rises, and leasing rather than buying, and downsizing office space, warehouse space, whatever that might be. Then there's just this last one, which was, there is access to money that you don't pay back. It's called grants. So grants are out there We've had a few of these lately that our lovely Chancellor came up with. So furlough grant, SEISS grant, the if you've got business premises, small business rates relief grant, the discretionary grant for people with business premises who didn't qualify for the other one. James has got some bits of grant money that he can do. There's the new one that's about to come in the next month or so, that's for small businesses, helping them get out of COVID. A lot of them in normal times, which we're not in, a lot of them in normal times would expect the purchase of something like plant and machinery and assets, and you might get 30 or 40% of that back by way of a grant. But it's certainly still worth having, you know, if you can find the cash short term and then get a grant for 40% of the thing that's going to generate loads of cash in the future. Often they have criteria attached that are about job creation and efficiencies or environmental credentials or whatever it might is. There's like the Prince's Trust that have some age criteria. There are specific local pots that have location criteria. But they're out there, and it's certainly worth looking at, because whilst the grant is a taxable income when it comes into your business, it's not repayable. So that's not an access to finance that needs repaying. It's access to finance that doesn't, but it is certainly worth a bit of research to see what's out there and whether or not you would qualify. And that is the end of my slides. Have we got any more questions?
Thanks, Joe. That was really good and really informative. I think I've taken away